the end of the quarter, the end of the month, so things are starting to get people take advantage of the uptick. We're getting out of some positions before the long weekend, and next week's going to be a short week for traders. So I think this is nothing unusual. I mean, we're still up a little here. Volume is very light. Really nothing to make anything about it. It's just I think guys are just getting out of positions. Tomorrow is the end of the week for a lot of guys, and they'll be out of here.
What do you see as the next catalyst for this market in either direction? Is it G20, a possible Fed rate cut, or earnings, which will resume in July?
Good point. Well, I think right on the horizon, of course, is G20. I mean, we had the Treasury Secretary this morning say, there's positive talk when 90%, yada, yada. We'll have to see. I mean, both these guys, Z and Trump. Then, of course, earnings. Market. So that's a big one coming up. We'll see how that looks.
And by many estimates, we are expecting a decline in year-over-year earnings growth for not just the second quarter, but even out to the third quarter. I guess how might the market respond to that, should it materialize?
Well, earnings are the lifeblood, and I think if they start to dry up a little, you'll see the market sell off. Remember, we're up 6% for this month coming into today. So the market's still acting strong. So a lot of traders are going to look at this and say, hey, if they really are pretty bad this quarter, maybe we ought to take some off the table here, and I think you'll see them sell.
And we seem to be seeing a ceiling in the market at around 2950 in the S&P 500. It's certainly a respectable level, but we haven't really been able to meaningfully break past that. Do you think a level beyond 2950 comes at some point this year?
Yeah, I think definitely. I think if you see a trade agreement between Z, a positive agreement, you could see that break pretty quickly.
All right.